Hi there, it's Vince Mohr, your home loan specialist on the Central Coast, Central Valley, and beyond. And today I just wanted to go over or share with you the idea of some of the home loans that are available in the marketplace today. And I'm not going to go over each type of loan in great detail or go over the nuances of each loan. I'll do that in subsequent videos. But I saw a real estate professional had put a post on one of their social media sites the other day, and it was a picture of the yard sign in the front yard of one of their listings. And attached to the main sign was a sign rider, and it said FHA, VA, and conventional loans available. So I thought I'd touch on each of those. So first, the FHA basically stands for Federal Housing Administration, and they're under the guise or the auspices of HUD, the Housing and Urban Development. And the FHA is basically insures the lender should in the event someone default, that insures the lender that they're not gonna suffer any loss. So they do allow for with FHA, smaller down payments, maybe a little lower credit. There's some really good things about the FHA loan. There's pros and cons that we'll look at later. But the maximum conforming amount for FHA is $453,100, and that's the conforming amount for all loans across the country. So then, depending upon the county that you live in, will determine the maximum FHA high balance, it's called. So, like for example, in San Luis Obispo and Monterey counties, the maximum high balance is $615,250. Then you drop down to Santa Barbara County, and the maximum high balance is $625,500. And then if you go over to the Valley, Fresno County, Kern, Merced, Madera, the maximum is just the conforming maximum, which is again the $453,100. So that's kind of just a cursory overview of the FHA loan. The next is VA, which stands for Veterans Administration. Also under HUD, and same thing. It just ensures the lender that if a vet were to default on their loan, that the lender would be insured or covered. So great thing about VA loans is that you don't have to put any money down, and the VA loan, the maximum as far as with no money down, again, depending upon the county you live in, and the high balance amount for that county will determine how much of a loan you can get with nothing down. So for example, in SLO County, if you have a loan amount greater than $615,200, then any amount above that, the vet's going to have to put 25% down of the amount above the high balance amount. So it's not 25% of the entire purchasing price, it's just 25% of when you exceed that threshold. So, and then the next loan, conventional loans, basically same thing. There's the conventional conforming amount, which is the $453,100, and then depending upon the county you're in, is what will determine the high balance. So Monterey County, the high balance is $615,200. So those are kind of the mainstream loans, if you will. But there are many other loans. The next we may want to look at in the future would be a USDA loan. Stands for United States Department of Agriculture, and also ensures the lender that in the event of a default, that they'd be covered or protected. And there's not necessarily a maximum loan amount. There's minimum thresholds for qualifying, but as far as the loan, there's also maximums. So that depending upon someone's income will determine the maximum loan that they can qualify for, but there's not necessarily a quote-unquote maximum loan amount. And then the other thing with the USDA, the property has to be in a USDA zone. In other words, the government has deemed or said that homes in this geographical area qualify for the program. So, and then there's jumbo loans. And jumbo loans mean anything over the maximum high balance on a particular county. So if you're looking at Monterey County at the maximum high balance, $615,200, $615,251 and above would be the jumbo, would put that into a jumbo category. So with jumbos, depending upon the lender, it will determine how high they'll go. Some lenders go to a couple million, others go to maybe 3 million, and there's others that will even go higher. So with jumbo loans, you typically are required to put more money down, and rates are a little bit higher, but it definitely fills a need for anybody that's exceeding the high balance amount. So, and then there's what's known as non-QM loans. I don't want to call them subprime, but non-qualified mortgages. And there's just a myriad of loans that fall into that category, where you use bank statements and average bank statements for 24 or 12 months, depending upon what kind of bank account that it is, business versus personal. And dependent upon the lender, of course. But so in lieu of tax returns, you can use bank statements. And then same thing with asset depletion loans, where you just take the total assets. There's a formula to come up with how much monthly income that you can use to qualify borrowers in lieu of averaging a couple years as far as tax returns are concerned. And then there's back to stated loans and not putting anything down in the way of income. Like I say, there's more and more loans coming, non-QM loans coming out, every day. So, but the mainstream loans are the FHA, VA, and conventional, and that's why I'm sure why this real estate professional had that on the rider sign. But if I could assist you with any home loan needs or answering any questions, please get in touch. And like I say, we'll go over each of these loans in greater detail in subsequent videos. So I wish you all the best, and thanks for taking the time to watch this video.